we're going into a circumstance where, with or without my hard landing, which I still expect, we've talked about, the Fed is expected to cut. The Fed itself is saying it's going to cut, and rate cuts are typically good for gold. If we're going into a rate-cutting cycle with gold at nominal all-time highs already, or even if it corrects, if it drops $100 from here, we're still close to $2,000 an ounce. And you go into a rate-cutting cycle from that level, and that portends very, very bullish things for not just the metal, but for the associated equities.
Lobo Tiggre, CEO of the independentspeculator.com, offers insights into the recent surge in gold prices, attributing it to the anticipated rate cuts by the Federal Reserve. Tiggre suggests that entering a rate-cutting cycle with gold already at high prices could signal bullish trends for gold and associated equities. This sentiment is echoed by analysts from J.P. Morgan, who predict further upward momentum for gold prices, driven by expectations of a U.S. rate cut and a weakening U.S. dollar. Gregory Shearer, the bank's head of base and precious metals strategy, emphasizes J.P. Morgan's strong conviction in gold's bullish medium-term forecast, identifying it as the metal with the highest growth potential. While Monday's rally pushed gold prices above $2,100 an ounce, it's not entirely unexpected. Analysts note that the rally was triggered by disappointing second-tier economic data in the U.S. and the potential for a short squeeze as sentiment has been dismal since the start of the year. Tiggre acknowledges the recent increase in gold prices, but emphasizes that it isn't a significant breakout, but rather a modest uptick in a trend. He suggests that market sentiment has shifted towards anticipating earlier Fed rate cuts in response to recent economic data, with a possibility of rate cuts as early as June. However, Atlanta Fed President Raphael Bostic cautions against hasty rate cuts, stating that the Federal Reserve is under no urgent pressure to cut interest rates due to a prospering economy and job market. Bostic's remarks highlight the risk of inflation remaining above the central bank's 2% target or being exacerbated by pent-up exuberance. Before watching Lobo Tiggre's interview and the latest market trends, subscribe to our channel and give this video a big thumbs up.
We have a new nominal all-time high in gold, and seems like this big breakout. But we've been trading close to that for months. I mean, gold has never been at 2,000 or above on, so much, before at all, and let alone staying there for months. Which, by the way, is very good news for the better gold miners, right? And they should be printing money hand over fist at these prices. So the current quarter should deliver some very interesting financial results. To the point, though, it's like, this isn't this huge breakout. It's like a $40, $50 move. It wasn't, $200 in a day, or it wasn't a Bitcoin-style move. It was actually a fairly ordinary uptick for gold, starting from a high base. So for me, the significance here is, new nominal all-time high. And I keep stressing that because a real all-time high would be, like real not as in real, but real as in adjusted for inflation, would be over 3,300. So this isn't really an all-time high. Anyway, so I don't see this as a huge breakout. I just see it as notching a little bit higher in a trend. And in some ways, that's actually a good thing. If it had just gone like this, then you know me, last time we spoke, I'd be saying, hey, after a vertical rise, it would make sense to look for a correction, a bit of a pullback here. So I see this as more stable. And the exciting thing for me, the audience, if they're familiar with our talks, they know, I'm not to jump up and down and pound the buy button. But I'm very excited this year because we're going into a circumstance where, with or without my hard landing, which I still expect, we've talked about, the Fed is expected to cut. The Fed itself is saying it's going to cut, and rate cuts are typically good for gold. If we're going into a rate-cutting cycle with gold at nominal all-time highs already, or even if it corrects, if it drops $100 from here, we're still close to $2,000 an ounce. And you go into a rate-cutting cycle from that level, that portends very, very bullish things for not just the metal, but for the associated equities. Fun? This is me being very excited. What happened Friday is interesting, particularly interesting, because Thursday we got PCE, the Fed's favorite form of mismeasuring inflation. And that was kind of a nothing day. The markets wobbled and kind of sideways. There was no big movement on the supposedly really important economic statistic, the Fed's favorite form. That's the goalpost. Instead, nothing much, and then Friday, fireworks. Well, what happened Friday? Well, we got, decidedly weaker than expected manufacturing PMIs in the U.S., so more signs of distress on Main Street, which, we've seen for years now is good news on Wall Street. And we got the confirmation read from University of Michigan consumer sentiment, which was surprisingly negative. So, again, bad news for Main Street, and we've seen this show repeatedly in recent years. Good news for Wall Street because the Fed is expected to cut. Now, remember, until when we spoke last time, the Fed was really pounding the table on no rate cuts anytime soon, higher for longer. Powell will probably say something like that again, coming right up. The markets were finally starting to believe the Fed. And then after these surprise numbers came out 2 days ago, the market suddenly maybe the Fed will have to cut sooner than we were thinking. And so the rates, you can see the rates are now, there's actually 4% chance back on the table of a rate cut this month, where it was effectively zero before. 4% is not a lot. But it goes way up in May and much higher in June. In June, it's more than 50-50 that the Fed is going to be cutting. So that's H1 of this year, not, sometime later or maybe next year. So there was a big change in market sentiment of, yay, more bad news. Yay, the Fed's going to have to cut sooner. And so risk assets went up. Bitcoin is a risk asset. Though, actually, I think Bitcoin has more to do with the halving, and the new Bitcoin ETFs have helped. There is... Skeptics aside, there is new money coming to the table. You made it easier for people to buy into that highly volatile speculation vehicle, and some people are taking that up. So, yeah, some money is going there.
Spot gold saw a modest increase of 0.2% to $2,118.59 an ounce, while gold futures expiring in April held steady near $2,126.75 an ounce. Both these instruments recently settled above $2,100 an ounce for the first time in history, edging closer to their record highs of $2,135.72 an ounce for spot gold and $2,130.20 an ounce for futures. The surge in demand for gold was fueled by several factors indicating a slowdown in the U.S. economy. Additionally, concerns about a looming recession in Europe and Japan, alongside tepid growth projections in China, further bolstered safe haven demand for the yellow metal. Lobo Tiggre expresses optimism regarding the potential for significant gains in the gold market once bearish sentiment dissipates. This sentiment underscores the belief that gold remains an attractive investment option amidst global economic uncertainties, reinforcing its status as a safe haven asset in times of market turbulence. Now let's move towards the interview.
All-time high in gold didn't do it, what would, right? I get it, right? I just gave my talk over here, and I was saying how many people think there's something broken in the gold market? How many people feel like things aren't working the way they should? Most of the audience put their hand up. But I get it. That's the sentiment. That's the bearish sentiment we've been struggling with for more than a year now. But I actually think that Friday was the proof of the pudding, that gold stocks moved Friday. So, okay, they didn't hit new all-time highs as well, but they did move. They've been you'd think they were knocked out on the mat of the boxing ring and they couldn't get up. But they picked themselves up Friday, the good, the bad, the ugly. I looked at a whole set of them, and it wasn't just, the biggest names in the space that immediately got a bid, though some of them did well as well. It was mid-tiers, it was juniors, it was explorers, The lot of gold stocks did really well, and that's what we want to see. So I'm not saying, this is it, we're off to the races, D-Ron, it's gone, buy right now, because it's straight up to the moon. We don't know that. As we said, this wasn't this huge breakout. It's more of a staggering higher as we go. I think this is actually good news for the buyers. But to answer your question, what would make it go? I don't think it's just a new nominal high like that. I think, though, that the fact that we did see the stocks move begins to indicate the answer to your question. So more of that, bigger of that, more consistent of that. So if we close not just a few pennies, but significantly over 2,100, and we do it not just for one day, then if 2,100 is the new 2,000, then at some point, all these people who are thinking that gold has spiked and has to go down, at some point, they have to realize, you know what, it's not going down. It's putting in higher highs. It's building another plateau here at an even higher price. So basically, I'm looking for bear capitulation. And we haven't seen that since 2020. The bears have really been a dominant force. I can't blame them. Recency bias being what it is, and the history of gold spikes being what it is, it spikes and it comes back. The bears are not wrong to look at gold's track record and say, you know what, going up to 2,000, it should go back down. Like historically, that's what you would expect. But I do think the game has changed. I don't think it's 2011 all over again. And I think when people realize that, when the bears capitulate, we will see not just the gold stocks finally, catching up with gold. I think they'll more than catch up. I think we will see, if not a mania, maybe it's not NVIDIA scale mania, AI mania, but I think we will see a lot of money pile into this space and substantial gains for long-suffering gold bugs. I think there's bigger producers, there's mid-tier, there's junior producers, so not all producers are alike. And even some of the bigger players have had idiosyncratic is the word we like to use in financial media these days, company-specific issues holding them back. So it's very much a stock picker's market. It's not just that they're unloved for no reason. A lot of them have struggled with cost blowouts, higher OPEX, missing guidance. And the last big bull in gold is funny. The companies kind of went nuts with buying ounces but let's say with less due diligence on the quality of those ounces, just get more ounces on the books. And they got rewarded in the up phase for buying gold juniors that had a lot of, multi-million ounces. Right. And then afterwards, it turns out a lot of those acquisitions weren't so great. And the big players got taken behind the woodshed and taught a lesson on that. So this time, they're not doing that. We've seen, I think, much less M&A than you would think at $2,000 plus gold. Where's the M&A? Well, management got pounded for getting carried away with the M&A last time. So I think they're being more judicious this time. So instead, they're making a different set of mistakes. And sorry, but there's been a lot of underperformance.
The LBMA London gold price reached new highs today, March 4th, 2024, with a morning auction price of $2,083.15 and an afternoon auction price of $2,098.05. This performance exceeds analysts' recent forecasts, as indicated in this year's LBMA annual Precious Metals Forecast Survey, where the average gold price forecast was $2,059. How do you perceive the impact of anticipated rate cuts by the Federal Reserve on gold prices? And what implications do you think this has for investors? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.